Good morning, everyone. How are we doing? Hey, Cisco, what's up? How's it, brother? All righty, everybody have a good weekend. I tell you, these summer weekends, boy, they go quick, really quick. What's up, Raj? How you doing, brother? All right. Well, not much to report tonight, huh? We got a bit of an inside day. You know, we're still inside Friday's cost basis and range. Well, range a little bit lower, back and forth. There seems to be resistance at 75.11 now. For longer term traders, if you are short, and it's understandable if you are short because you got a ton. You see all of this? This is all trapped long inventory here, right? All of these people are long, they're trying to find the bid. And here's another thing that's interesting. We have an unfilled gap to the upside. That's supply. That's a supply gap. When gaps are above you, it's supply. When gaps are below you, that's a short position. Very simple, just mechanically correct. So we have supply above us. It's forcing down. There are some bids. The thing is, there's not that there's a ton of selling. There really isn't a lot of buying right now. So you'll see when I bring the 1 minute chart across, you'll see that it's really, it's choppy. Check this out. So if you're a large trader and you're like, okay, you know, I want to be short under 11, your overnight high is your warning zone. And if you're like putting on a lot of contracts, your wiggle zone is between 11 and 26. That's obviously not for small retail traders that trade. And you're looking for lower. Your ultimate target, if we can't get over 75.11, your ultimate target's going to be 73.96. I mean 73.91, sorry. Right, this is the zone that we're in. The middle of it will be around here. But we're just stuck right now, right? So a little bit slow. Let's pull over the remember I told you guys the daily, the middle of this zone is 74.78 and our low is 74.82. So we're still in the top half of this 73.55 to 76.01 zone. I've got your squiggly lines there. There's your 50, there's your 200. Okay. So we'll see if we break 74.78, you're going to see some liquidation down to 7400. We'll see where the bid is. Hey, Josh, welcome to the room. Good morning. Good to have you with us. And let's go dig into this thing. Oh, yeah, before I forget, half hour chart, right? This is a half hour candle wax chart. You can see there's a seller at 7,500. And you can see all of the inventories above us, right? It's all trapped long, right? So we're going back and forth over 7,500. I don't see a size long-term trade just yet. It's Monday morning, middle of July. We will have some earnings out. I want to see if we accept back up over 7,500, 75.10, 11 is your target. Lower breaking 74.90, we'll look for 74.77 again. I'm obsessed about this 74.66 level, and you guys know the reason why. I showed you in the weekend update video. I prefer chatting on the Discord if you don't mind. You see a fair value gap at 74.78. I don't know what a fair value gap is. We do business in a very simple way, right? I think we'll see some value come in if we break a low. That's exactly, Josh. Welcome to the room. And yes, we are expecting choppy price action. It's an inside day. Inside night, I should say, right? The point of control moved down, so we have good absorption. And it's just the overnight point of control is right where the close is. It's a very mechanical, precise market. What we want to do, we take edges, um, AZJY09. Good God, that's a lot to say in a right. What's your name? I'm just gonna call you '09. Okay, it's a lot easier. So the trades that we like to take are trades from the edges. The look below and fail. It's doing the same look below and fail of 74.94. There's going to be selling at VWAP. The best business right now would be, since inventory is corrected, build a little position here and sell it up here. That's short term. There's your out. Oh, you're Josh. Okay. Well, welcome to the room. You're not in Liverpool, are you, Josh? We've got about 6 Joshes in Liverpool. Yeah, so we really like to take trades off the edges. Look below and fail of 74.94 up to 97, couple of points. Let's go mark off the sellers. There's going to be sellers here this morning. If you are, say if you are building a position, if you're going long because inventory has corrected, you'll be building between 94 and 97, selling 98, 99, 7,500. There's not a lot of meat on the bone right now, but that's okay. It's Monday morning. Things are just getting going. What do we have for earnings this week? There must be a crap ton of them, eh? Intel. Intel's actually a thing now. Never used to be. Alphabet, Tesla, IBM. Ugh. Yeah, inside day we'll get choppy price action. Oh, from the West Coast. Cool. Yeah. Nothing to get excited about today, folks. Domino's. Ugh. I'd rather eat the box. It's got to be the worst pizza in the world. Okay, London's going to open in 3 minutes. Let's see if we can get any excitement. I think everybody in the UK was watching the World Cup last night. So, yeah, not much going on here for see how small the candles are? For us, when the candles are like this, just relax. So now this is a wholesale business, right? So for you guys, when you look at a chart, especially a 1 minute chart, and you see like boom boom like this looks like chopped salad, right? You that is not for you right now. The only way to trade this is to build a long position, right? And sell it here. Use the middle of the zone, accumulate underneath, liquidate above. That's what wholesalers are doing. Yeah, there's a seller at 97 and a half, and it is a very slow Globex session. Hey John, how you doing? It's a slow night in 7-Eleven, that's for sure. Let's see if London can get us some lower prices. Can we get a sale? You guys all still hungover from yesterday, or anyone have any questions? No? What I'll do is I'll open when London opens. If nothing happens, I'll stay on stream for a couple of more minutes, and then we'll shut her down. Let you guys go, unless somebody has any questions. I don't want to waste everybody's time. This is really slow. Well, London can't get any inventory. So if you are lugging 94 to 96 inventory, be on the offer. You know, if you're long, I don't know, 97, sell the 99s. Shit, there's, I mean, get paid. You know, if you're a size trader, you could wait and sell '02 to 5. But if you're long 510, like say at 96, take the couple of points, right? That's all there was. Not much meat on the bone tonight or this morning. Yeah, I mean, we told you there'd be sellers right under 7,500. They've been there. Then they'll move up. They're just going to scale up. right? If we pop VWAP, it means if we get above VWAP, right, it's going to be there's enough dumb shorts here who shorted between 94 and 97 and pop it. How do we know that there's no inventory? Because nothing for sale under 94, my friend. Basically, the chart's telling you here nobody had to sell under 94 because there were buyers, so they raised price. Markets are very simple. And enough people are short, now we're going to push up. You'll be looking for 3 3/4. There you go. People who are long here should be offered here. Just like I told you this would happen when we started. This is where your inventory is priced. This is where you're selling it for profit. These short-term movements, that's how wholesale traders make money. That's why if you want to trade, seems like a good day to catch up on rest. Definitely. Right. Yeah, one thing, my friend on YouTube, this whole business is nothing but just inventory and order flow, right? So you have an inventory of goods. In this case, they're ES contracts. The order flow is a really fancy way of saying customers. So you see all the inventory is under 97. It's 94 to 97. All the liquidating inventory here, right, came into wholesale hands and now it's being redistributed for profit. That's why they call it a market. Cisco, what are you doing now? You're speaking in tongues? Hand, crystal ball, chart, dollars. Very, very creative, my friend. Oh, man. It should be really simple. Aguatico, and thanks for being with us on YouTube this morning. Yes, trading should be simple, right? Our job is to move. Bingo. Now you're cooking with gas. Now you're cooking with gas. Our job is to move inventory. Well, when we first start trading, our job is like, the skateboarders who grab the bumper of the car that's going down the street and get a ride. That's what we're trying to do at first. So we're just trying to judge traffic. Then later on, as we build size and sophistication and skill, we can actually be a part of that traffic, right? Yeah, it's a simple business. They love to overcomplicate it to keep people confused so they keep losing money and paying for things that they don't need, like fancy software and blah, blah, blah. You know, all you need is a candle chart and the ability to draw a straight line and the ability to pay attention. That's all trading is. For us, trading is just looking at the small little details, knowing what to look at, what to block out, right? The only information you should be looking at is where are they selling, where do they stop selling? That's all you got to think of. Where are they selling, where do they start selling, where do they stop selling? Where they stop selling is where I want to be a buyer. Where they start selling is where I want to be a seller. I don't look at the DOM. Like I said, all you need, my friend, is this. This will tell you more information than any DOM. The DOM, let me put it to you this way. You guys look at the DOM because none of you have ever traded size. If you've ever traded size, you would know that no large size trader is going to show their orders on a DOM unless they're on a 4-day crack binge, right? Unless, like, say you're trading $200 million. Okay, if you've been doing drugs for 4 days and 4 nights, you will tell everybody where your orders are on a DOM. Otherwise, you wouldn't, because it'd be like showing a poker. You're sitting there playing poker, you're showing everybody your cards. No trader in his right mind is going to show all of his orders that he's working, his size orders. He would be insane to do that. Or high. That's why I don't look at the DOM, because I've been manipulating DOMs for 30 years. These are actual trades and transactions that have happened. So since it's kind of slow, let me show you guys something, right? You see this? Those are actual transactions. Somebody bought, somebody sold, 74.99, half, three quarter. Those are the actual record of the transactions. That and this are the same thing. So this is the same as this. This is just showing it in a graphical format. This is transacted volume. The DOMs are expressions of interest. The depth of market or order book is not transacted volume. Transacted volume does not lie. Right now it tells you at this price here, there are buyers under 99. Why? Because you don't have to sell under 99. So if I saw buyers under 99, I'm going to raise price and see if the bastards follow us up. We know that there are sellers at 1/4. So it could just chop around between 99 and 1/4, like this. You see? This is distribution. This is accumulation. Watch. Accumulation, distribution. The difference is profit. That's why they call it a market, right? So in the old days, we just watched the offer. So if I wanted to go long, I'd wait until it went offered over 7,500, came back and tested 7,500 on the bid, and then lifted. But you don't need to do that now because you can see the offer here. All you need to do is watch this. This is all you need. Right? So if you're a short seller and you're short 7,500, your stop is 1 or 2, then you put some bids down here at 97, 98, 99 and try and cover. If those bids do not get hit, then you know there's no supply, right? So if you're short, stop, put a buy order here, a buy order here, and a buy order here. If those buy orders get filled, you can stay short. If those buy orders don't get filled like it's doing now, take the offer. There's a bid here. See, it's so simple. Now all you got to do is practice the execution thousands of times. So it becomes like breathing, right? And the less things that you're looking at when you're trading, the better. Because trading is like a street fight. And when you're in a street fight, you don't want to be thinking about 20 or 30 different things. You need to keep your eye focused so you don't get punched in the head. Okay? So you should have a simple 1 or 2 or 3 step method to trading. Now, Aguatico, I need you to listen, my friend. How do you get better at risk record? Do you use TPO tick sizing? I don't even know what the hell that is. TPO tick sizing. Try and say that 5 times really fast after you've had a few cold ones. I don't even know what that means, man. I'll tell you. Sorry. I'm in a joking mood, okay? I'm just kidding. Just pulling your leg. Right? So here's the trade we take, right? We I have my level here. So I go long here, I put my stop here, I sell a little bit here, I sell a little bit here, and I sell a little bit here. If the market violates that level, it means that the inventory I purchased at 95 is mispriced and I must blow out my inventory. Right? TPO tick sizing. It sounds like something that you like need to get a vaccination for. I got TPO tick sizing. Oh, better get the antibiotics. No, seriously. Okay, this tells you not to trade. If you were shorting and you saw that there's a bid here, you cover, right? Trading's common sense, right? It's all common sense, my friend. They've taken retail trading and bastardized it so much that you guys are spinning around like dogs chasing your tails. You have no idea what the hell's going on. They feed you all this stuff. Unfinished business. Velcro walls, frickin' what else do they have? Oh my god, bulls holding flags, raccoons holding fucking pennants, all sorts of crap. All you need to know is where's the seller, where do they stop selling? It's a market. It's a market, my friends. Where's the seller? The seller's at 7,500. Where do they stop selling? 99. Is that tradable? No. Simple. Have a coffee. Go to the gym, right? Keep it simple. Train yourself to only trade from the edges, right? No problem. Hey Dave, how you doing? Yeah, just keep it simple, folks. Like right now, there's no trade. The market's telling you. Remember I said it's a wholesale business? So if you were long 1,000 contracts here, you're selling 1,000 contracts here or as many as you can. If you have to, you'll put them on sale back down to cost basis. Cost basis is how much did we pay for our crap? We're selling it at profit, and then if we have to put it on sale, we bring it back down to where we bought it. If we really have to put it on sale, this is like TK Maxx, right? You get the max for the minimum. This is where you paid for it. This is your profit zone. This is your discount zone. Really simple. That's all there is to it, my friends. Alrighty. That's pretty much it. There's still some bids at 99, right? They just stop selling when they get to their cost basis. Oh, that's another thing. Traders don't defend price. How price is defended when you stop selling. You stop selling when you see buyers. That's all it is. Yeah, definitely, John. So your stop has to be structural, right? So let's walk through this, right? Say I'm buying 74.95, right? My stop's at 90. Say I use 94 as a stop, right? This price action is slow, so you know you can use a tight stop, right? So one is environment, right? What's the environment you're in? It's a slow environment. You can use a smaller stop, right? Now, if it was going like this, right, and bouncing a lot, then I'd go, oh, if it's a really fast market, I'm going to use a bigger stop. But is there still that reason to go long? Even if I have to use a bigger stop, is it worth the risk, right? Hey, Sergio, welcome. Right? So is it worth the risk? And the reason for the trade is still the same. I'm buying 95 to sell 96, 97, 98. If somebody comes and puts it on sale underneath 93, I might let the trade work a little bit if the inventory's underneath us. If the inventory's on top of us, there's still downward pressure, probably not the best trade, right? So over time, you will start going, maybe not, this is not such a great idea, right? The other thing too, right? If you have to place a wider stop, if it's a more volatile market, and don't take this the wrong way, anyone, right? I do this myself. Am I in peak trading mentality condition that I can trade fast enough for this market? It's something you need to think about. If you're not Say you were up watching the World Cup last night and you had like the kids in my building, they have like 10 beers. You probably don't want to try and trade a fast market this morning, right? How do you identify the seller has stopped? Wow, what a great question. I was waiting for somebody to ask. When you see the seller has stopped, they will raise prices. Pretty simple. Pretty simple. Right? They'll get down to an area and they'll raise price. Right now, I think they're going to lower price underneath 99 and probably come back down here. Let's see. Let's see if I'm right. Watch. I have this green and red line. It's the bid ask indicator. When the offer or the ask moves up, it means they're raising prices. Here, let me make it bigger. This is all you need to know about candles, by the way. The top of the candle is where they initiate. The bottom of the candle is where they stop selling. How simple is that? See how the red line lifts? And then the seller initiates. So the sellers were here, then they moved here, then they moved here, then they moved here. That's what causes price to go down. That's called price competition. Right? One starts selling, boom, see there you go. Remember I said they're going to start backfilling? That's what this means, right? You go up to create demand, you go back and fill in that demand with supply. Very simple. So had you been short, like say we were short 7,500, stop 7,501, right? We probably would have covered by now because we would have had our bids. So that's basically the trade is called the look above and fail. So the trade looks above 7,501 and fails. So the sellers start to sell. You sell with the sellers. You put your stop where if they stop selling here and go like this, you're screwed, so get out of it. Every trade that we take has a valid business reason. The reason you're shorting is that you identify sellers are putting the product on sale. Here you see that sellers don't have to sell under 94, so you're buying. You're buying supply, right? You're long supply, selling up, and then you just trade this rotation back and forth. In the middle, just leave it alone. In the middle is where you can cover if you want. So if you're short 7,500, 74.99, buy some back at 97 and three quarter, 97 and a half. You can, if you're a larger trader, have your bids in. So as the market comes in, it hits your bids and you're filled. Then you're not chasing the price. Very simple. No, no, don't look at Delta. You're wasting your time. Just leave it alone. I'll tell you, you'll make more money at the edge. Don't diddle in the middle, right? I don't see a long right now. If we cleared 7502, maybe a long. Right now, I'm looking for just some back and forth. You see, we're still above this cost basis here, right, Josh? So we're still making money selling it here. We came right back into the cost basis and they raised price, right? So right now it's just going to be choppy. You know it's slow because it's that time of night the candles are telling you it's slow, right? So it might get to 7507, but it might take a couple of hours. It might take 5 minutes. This way, you only trade when it's really, really clear. You just joined the room, so there's a bunch of videos, a bunch of documents. Reach out, DM me anytime. Alrighty. There's a good bid. Look, there's going to be a seller right here. And then here, and then here. So had you gone long 97.98, you know to sell 99.7500. You know where the sellers are. You see where they stop selling. That's where you go long. If you're going long, and your stop would have been here. I like to trade from the edges because it's just I get a better deal. Here you get a better short because you get better prices. Here you get a better long because you get better prices. I kind of don't like the middle, right? Unless it's really, really clear. But and also it's clear and I got to be on the ball. Right? That's why I have those 5 steps, the method where you test yourself with the micro to see whether or not you're trading. Because unfortunately, sometimes we think we're like, oh, I got a good idea. This is really good. This is a really good idea. I'm really smart. I'm really going to do this. And then you're in the trade. Oh, this is not working, right? You have to be able to police yourself, right? It's very choppy. The candles will tell you, Josh. The candles will tell you, right? The candles will say, "Hey, man, it's slow right now. Like, just chill out." You might make 1 to 3 points here, which isn't bad. Listen, 1 to 3 points on 3 to 5 contracts is good money, right? Even 2.5 points on, 3 to 5 contracts, you're paying your bills. See, it's getting a little frisky here. Let's see what's going on. A little bit of short covering. Your 7 might be on track. That was a good call, Josh. I don't know how you saw that, but that was a good call. Well done. Just as we were saying it's really slow, all of a sudden you get a big candle. Check that out. Nicely done. Nice call. Yeah, definitely, John. Definitely. Good stuff. Anybody else have questions? Welcome to the new folks in the room, and good call, Josh. That was really nicely done. No questions? You guys okay? Everybody in the room awake? So we know there's a bid right at 98, 97. We will see you guys at 9 o'clock. That's okay. That was a really good call. That was a good call. We'll see you folks at 9 o'clock or 9:15 Eastern time for the next session. Have a great morning. And thanks for being with us. Appreciate you guys. Bye for now.